years. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to John in Orlando. John, what's going on, brother?
Good afternoon, Tom. How are you?
I'm doing great, man. Yourself?
Good. I want to tell you, I've been listening to you since your radio days back in '99. Appreciate what you guys do. But what I really enjoy that you brought back Tim Ord. This guy is as smart as a whip.
I am so happy for that feedback.
Yeah, because he's one of a kind. He's got to be the number one market timer. I'm telling you, it's like he calls it really good.
He does. I really appreciate the feedback, man.
Yes.
Now, Tom O'Brien.
What's going on, everybody? This is Jacob Shoup. You're watching the Tom O'Brien Show, and we have a market on our hands yet again. The SPY trading up 2.43%. You have the composite trading up 2.56% at 16,277. The Dow Jones Industrial also trading up 2.52% at 39,136, and the Russell Futures trading up 2.66% at 1899. Again, that SPY is trading at 526.28. Dollar, okay, still below 100, 98.91. Okay, you have crude oil creeping up right at 1.68%. Percent to the upside, trading at $63.46 on the light sweet crude futures. Gold is coming off a little bit, especially from a massive high we had today at 3,500, trading at 33.94 currently. Copper making some gains, silver making some gains. 10-year. Listen, this is the weird stuff, right? I mean, why are we rallying today? Well, I guess the theory, or what people are attributing it to, is that Besant had a kind of private meeting with JPM and basically said what we have now is effectively an embargo on China, and that is unsustainable. And he anticipates essentially a de-escalation at some point in the future. To be clear, he said that the two countries will have to find ways to de-escalate in the very near future, and that tensions could cool in the coming months, but caution that a larger deal could take longer, potentially happening in 2 to 3 years, which he added to that, saying that we would like to see a world where America is the manufacturer and China is the major consumer. I don't necessarily think that this is a reason to send the market as high as it is. I don't think that really establishes any kind of certainty. Who knows what a de-escalation looks like? China has already mobilized in order to kind of fill some of the gaps that have been created by this, what Besant, I think, is effectively calling, accurately calling an embargo. Your volume is not immensely high today on the SPY, kind of more in line with what we've been seeing for the past few trading sessions. Of course, we still have an hour left, so we can see what happens with that. We have Tesla earnings. Let's even look at it this way, right? You had Lockheed Martin, GE Aerospace, Raytheon, right? I mean, let's take a look at Raytheon right now just to see what's going on. They had a good quarter. They beat off 9.05%. And so, why? And the answer is that they see mass uncertainty, and the idea that we resolve some kind of tensions and just go back to the paradigm that we had prior, I don't think is what Besant is kind of saying. I also don't think this resolution will happen quickly, and this will require both parties to come to some kind of agreement. I wonder, does China now use this as some kind of leverage, as it seems like America, we're on the back foot with everything going on. I don't necessarily like this rally to the upside. I don't think it's necessarily secure. I have on my private account a list of highly speculative stocks that I just kind of follow to see what's going on, and so many of those are up 6, 7, 8, 9, 10% right now. And I have seen that with recent kind of rallies we've had in the market that end up puttering out, right? Taking a look again at Tesla, this is up 4.17% right now on some earnings. And I don't think they're going to have phenomenal earnings. And if they are floated in any capacity from the new Model Y, the forward guidance, I mean, if he's going to be honest about it, is going to be unclear. And it's also shaping up to seem like China might use, Tesla as kind of a bargaining chip, right? So, I mean, being up 4.08% in highly uncertain times on an equity that has had political issues, that has had sale issues that have been reported, and the forward outlook for them does not seem to be necessarily clear, is strange to me. This is generally the way that I kind of look at stuff, or I have been right now. You still have an elevated VIX, right? You are coming off 10%, but you're at 30.74 right now in the VIX. That's still kind of that upper, band that it usually trades in over the long term. But I mean, we're not, so many people had bought puts on the VIX around this time of the month, back down to these traditional levels, right? These lows around $13, $14. They're crushed right now, However, let's do this because this is kind of my longer term outlook, right? But it always helps to have some of our other traders come on and give their input as well. Take a look at the charts. We're going to go over to the newsletters tab. We're going to check out the opening call newsletter by Basil Chapman. You've heard me talk about it before, but I'm going to say it again. This is a fantastic newsletter. Of course, if you subscribe to it, he does a very nice long form video on Fridays, Saturdays, kind of going over everything that happened during the week and what he's looking forward to in the next week. He's been very active recently. People who have subscribed to this, post Liberation Day have really enjoyed this newsletter. Additionally, another great value added for the opening call newsletter by Basil Chapman is going to be these 90-minute live subscriber webinars that he does. He did one in November, so you get to check out all of those. It is fantastic. Additionally, he is on TFNN about 10 a.m. Eastern time. Every day the market is open for the Tiger Technicians Hour. Basil, how are you doing?
I'm doing well, Jacob. How are you?
I'm doing well. Quite an interesting market today, to say the least. I'm curious to see what you're looking at, because I do my kind of like fundamentals, right? Kind of sentiment, what people are thinking, but I really like getting into these absolute technicals that you have. So what are we looking at with the Dow right now?
So actually, while you're talking about technicals, let me just go straight to this. I was going to do this a little later. I'll do this right now.
Yeah.
So I look at three core patterns: straight up, straight down, a cup formation. It could be a V-shaped formation, which you're going from one point down and then back again, or an arch. You're going from one point up and then you come back down. It could be an inverse V. So there's just three patterns: straight up, straight down, cup, arch. You can mix them up, 1 and 3, 1 and 2. This is 1 and 3. It's called the H pattern, or dreaded H, when it takes out the left side low. And that says to me that you got to be very careful. If you take out the left side low and within 2 bars, you don't go above it. So what do we have? We have that H pattern right here in the Dow at 40,661 up to 42,821. Comes down, takes it right out and goes to the low of the 7th of April. That's an 18% correction already. And then it runs up very sharply. Of course, there was the Trump relaxing of the little pause, and we got a retest of that, and now we've come down and we're at this H pattern. So we've got the break perfectly, with suspense waiting to see what happens in the arch formation.
Wonderful. Basil, please stay right there, folks. We'll be right back with Basil Chapman after the break.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits. The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. We are joined right now by Basil Chapman, author of the Opening Call newsletter. Basil, before we went to the break, taking a look at some of the patterns you look at, and I believe we're about to dive into the Dow chart.
So I've got quite a lot to go through, so let me just do this real quickly. So this is the arch formation. If it fails at a peak A or a B, the first or second peak, and then takes out 50% of the arch formation, that's where you usually get the acceleration down. So today I said to subscribers, really important, there has to be a good rally above the high of the gap down from yesterday and a close above it. And if it does that, we will have time to look at a potential H to an M shape, a lowercase M shape pattern. So the day's young. But I'm with you. This is very suspicious, this particular move right now.
Yeah.
But what's fascinating, and I'll go through this quickly, in each of the sectors, and I wrote down, because you had just mentioned, you spoke about GE. So I'm looking at this and I'm saying, within each sector, there could be one stock that's doing really well, but the others are doing really poorly. For instance, look at GE. You spoke about GE Aviation. Nice move up, good earnings today, up 9. Just look at the same sector. You've got RTX, Raytheon. Look at that chart. Down, gaps down. It's down 11. Look at this. NOC. It was looking great just 2 days ago, and look what happened. It comes down from the 544 level. Today's low is, excuse me, 450. So I say to subscribers, I'm liking a particular stock very much, but we want to give it a day or so, because look, even within the sector with the credit cards, look, Verizon has had a terrible time. It's gone from the 366 high back on the 3rd of March all the way down to 300, and it's kind of bouncing. MasterCard, same thing, way from 582.73 on the 3rd of March down to 460, having a little bit of a nice session today. So I said there's one that I like, but let's hold off one day, and that was Discover Card. And look, it's a much nicer pattern. It's got a trend line. It's starting to break out. So even within the sectors and the groups that we would normally be looking at, you've got some star performers and some that are very weak. So I'm saying this is a very select market. You've got to identify what you like. You almost have to isolate it from the sector. It has to be independently very strong. So here's another thing. I spoke to you last week. I said, I believe that the dollar, there's a chance that the dollar, which is very weak, could find a little bit of competition here, in that Bitcoin might be finding some followers in the sense that it's gone through all the different tests that you would think for some kind of a currency.
Yeah.
And I think it's finding is ownership. I think they are now really big institutions. Look at this move today, 4,200. We've been long for some time. And here it is at 91,750. Very strong move. I drew in the rectangle. I hadn't even looked at it for about an hour or two. Look at this. It's right up there. So this is what I'm saying, that regardless of what you're looking at, just step away from all the noise. And believe me, every single economist, any friend that I have or anyone that's related to the economy just keeps telling me that tariffs can never work over and over and over again. So I'm saying, all right, forget about all that. If you want to be in the long side of the market, and we have some long positions, with some of our core positions, we're taking quite a bit off, but we've still got the core positions like Bank of America, Robinhood, etc. But here's something very interesting, that within the context of the pattern that you were just speaking about, and you said, I don't quite trust it. Look at the give back just from intraday, and this is not it sounded fantastic, up 1,100 points. Well,
Yeah.
we were into the lower part of the candle from 3 days ago. So a lot of work needs to be done to really produce the goods. So a lot of people are talking about gold. What's happening to gold? Well, this is a very strong move to the upside. It has a lot of technical veracity to it. Most importantly, though, there has not been the rotation from gold to silver. The question is, will it happen now? Well, it's kind of had its chance. So I'm saying this is something that we've got to monitor closely, because I still consider gold to be part of the geopolitical economic insurance policy. It's like a little gold card is gold itself. So when I'm looking at this, if there is talk about some appeasement, say, between China, is something happening that's positive, it has to be global, because right now I look at this move in gold as more an international commodity move as a safety factor. So until that really dissipates and goes away, I think we can have pullbacks in gold, and I'll talk about this candle right now. It's called, if we had to close right this minute, I'd call it a red inverted Chapman wave Roman candle. And what would happen is the next move within 2 days, it doesn't matter whether it's a daily or weekly or monthly, it's the bars, the next bar. If it sees a move that holds for about, let's say it's tomorrow, and it holds for about 90 minutes above 34.75, there's a real good chance we will test today's high of 35.09. If we close 2 sessions out of the next 3 below whatever the low is today, so far the low is 31.83.2, then be careful. The body of this candle, which was the open price was at 34.35, 34.39, that's going to be very strong resistance. So on a purely technical basis, it's due for a bit of a timeout, just a pure technical timeout. But all the technicals are still very strong. So unless gold slides under 32.80 in the next 2 days, I think we can expect some kind of a high-level consolidation. There's nothing wrong with that. But I'm looking at the gold and silver. When I say gold rallies and silver says, oh, what's going on? I'm going to catch up. Then silver catches up, and then gold takes a breather. We haven't seen that. Silver's kind of been almost out of the picture here.
Agreed.
So I'm treating them as separate things.
I think this is something I've been looking at with silver as well, right? And as you said, a lot of it is so much driven by geopolitics. China, of course, has been buying a ton of gold, right?
Right.
And silver, a lot of times, I guess, historically, you've had those kind of similar moves, right? But it seems disjointed right now, and I don't see where silver comes in and kind of fills that, that geopolitical gap along with gold.
It might independently as a commodity, but it isn't doing it in that usual rotation where they follow one another. That's really what I'm saying. Yeah.
Absolutely. And, seeing Bitcoin get almost, it's maybe I still think a little bit too soon to tell, but becoming disjointed. I mean, in the past, Bitcoin really was positively correlated with the Qs. Now, of course, the Qs are up today, but we've seen, a few instances in the past with Bitcoin being up when the rest of the market is down, and that is a very unique move.
I do have a correlation, and that's with Robinhood. And Robinhood is up today, but in a way, it's almost like the gold-silver thing, because Robinhood is still lagging quite a lot. I think it's due for a period of rest, and that's what it's happening. That's what I'm saying. For about 6 or 8 months, maybe a year, I've been saying, think of all these different things, like the VIX, like gold, like the dollar. Think of them all independently and do your homework, because they all do different things at different times. The correlations that they used to have, like bonds, when yields went up, then the market used to suffer. None of that works anymore. So that's the same correlation that I have now with the Bitcoin and Robinhood.
Basil, thank you so much. See you tomorrow morning at 10 a.m.
Thank you very much. Have a good day.
We'll be right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the 2nd and 4th Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. We're going to be joined very soon by Tim Ord of the Ord Oracle. Just waiting for a producer to get him online with us. Taking a look right now, kind of the market. You're seeing some give back right now. Okay, Tesla's coming off just a little bit halfway through the show here. I'm going to buy some TSLQ. Just not been having. That's not true. I've been having okay luck with options, but they're very pricey right now, and obviously I'm going to go to the downside there. So I'm going to buy some TSLQ for earnings. What I get concerned about with this is that a negative report on Tesla, and if there is some level of emphasis on the uncertainty and how much that's cutting into potential profits and sales overseas, that I think could cause a cascading effect in the rest of the market, right? Taking a look at Meta, up 2.45%. We take a look at Amazon as well, and it is being reported now, it's up 3%, but being reported now that they are going to cut some data centers due to uncertainty on the demand for compute. I haven't taken a look at Nebius today. I mean, everything's just kind of green. It's a 4%, and why? Right? I still think we're in a very tough spot. I don't think what Besant said necessarily makes me feel more confident about going forward. Additionally, you're now getting a ton of, your large firms trying to push out private credit. There's a big refi risk that's going to come up to us on June that I think is not being addressed yet by really anyone. And all I'm seeing around this area is them trying to sell private credit, which is very bizarre. And then you're taking a look at the 10-year. I mean, we're right at 4.4%. The dollar is still sub 100. Now, we're going up a little bit at 99, right? We're 98, 93. But nothing is like, on those fronts, totally improving, right? And it just makes me feel like I'm just suspect of this move to the upside. And we've seen as well, like the massive rallies that can come from things like what Trump and, what Besant say. And people have this kind of very exuberant reaction, and I'm not sure why, because I everything they're saying is like, look, we're going to be at this kind of, we're at this strange juncture where how we've been interacting on the global stage is not the way that we intend to act on it going forward. They have, we're not even halfway through this the first year of the administration, So we have a lot more time going on to where there's going to be some transition pains if this is kind of seen through. And of course, there's a lot of exuberance. It really is amazing that the market does want to get to the upside so heavily. But I think we're in a tough spot still. One second. All right, we're still working on getting Tim operational. All right, let's see here as well. Man, I don't know. I'm looking at all this. Nvidia is still kind of down. Did they improve? I think Huawei will be dominant there. You're up 0.78%. This is somewhat suggests to me it's impressive that that's a little bit more tame, right? That tells me that there is, I think, kind of a level of restraint going on, at least for things to the upside in the market. It's just bizarre, right? Because you had things like Palantir that are rallying very heavily, things like Tesla rallying very heavily. Of course, you're on an earnings report for Tesla. It is nice to see Nvidia not having a ton of exuberance to the upside and pushing on this kind of news. We, of course, saw with things like 3M, these companies that don't have a ton of exposure to tariffs regardless are doing quite well. It's up 8.07%, right? So potentially one of the things you can kind of see with this earnings is who can give some kind of guidance through this, right? I think a lot of capital starts flowing into something like that. I still think it's a very risky kind of environment because there are macroeconomic conditions that can totally affect us coming later this year. And again, you're not seeing a bunch of flow into bonds either. And, let's see here. So I keep getting updated. We take a look at 3M. Let me pull up these earnings reports here. Yeah, they beat earnings per share of 1.88. It's the first quarter was good for a lot of these kind of companies, right? Which is nice. I mean, same thing with Nvidia, or excuse me, with Netflix as well. If we can go hunting, right, for some of these equities that have relatively low exposure to tariffs, and maybe are things that are not, luxury spending. Like look at Lucid, right? Not sure immediately what their major exposure is to things like China. Kind of a luxury thing. Same with Rivian. But if you're taking a look at Netflix, which are like nearly like commodities at this point, right? I don't mean to say it like that, but I mean, these are so integral to America. I mean, same kind of deal with like 3M and what they offer. That might be the way to kind of park the money, which I find very interesting. We're taking a look at HUT. This is another thing that I find kind of bizarre, which I think again is a level of kind of like unjust exuberance. You have HUT trading up 10.24%. You have TeraWolf as well, up 17.11%. And this is going to be on the news with Bitcoin. This is, I don't know how to approach Bitcoin at this point. And something I've been talking with some of my friends who are crypto analysts and what they're looking at. I'm not yet fully convinced that people are seeing Bitcoin as a flight to safety. Of course, there must be some kind of thought with this if Bitcoin is up 4.5%. But I get a little bit freaked out if you get any kind of fear going forward, again, of a massive slowing down of the global financial system. You saw what happened, obviously, with bonds. If people get scared of like liquidity in general, I don't see why Bitcoin maintains this. Now, as to how many rapid pump and dumps occur in Bitcoin, it actually has been less over the past few years. Like the price movements, it very quickly goes into a trend, is what I'm trying to say. If we can see another, let's say tomorrow Tesla does very poorly, right? And then, obviously the composite crumbles from there, the market will go down as well, and Bitcoin continues to go up, it may be somewhat of an interesting play. I still think it is a little early to get into things like HUT Corp, which is a massive miner, of course, and things like TeraWolf. But you can see why people want to get in it. If you get anywhere close to the price of Bitcoin as you had it, I mean, there is a lot to move in compute companies like this. Folks, you stay right there. We'll be right back. We're going to get Tim Ord on the line for you.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand.
Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everybody. Jacob Shoup watching the Tom O'Brien Show. We have the SPY trading up 2.25%. Got the composite trading up 2.21%. Take a look at the SPY. Again, not really shaping up to have a ton of volume right now on the day on that bounce back. I just think this is all suspect. Tesla giving back any the kind of sell-off. Man, I mean, you have UZ up 5%, and the question is why? Why is Planet Labs up 2.87? Why are things like Lunar up 4.33%? Palantir, of course, doing okay as well. Again, this has been a very strong equity chart-wise. Well, enough of me talking. Let's move on right now. We're going to go over here on the screen to ord-oracle.com. Of course, we have Tim come on every Tuesday and Thursday. We really deeply appreciate his analysis. We go over gold miners, GDX, and then, of course, the general market. And when Tim was on last time, we were talking about potential, bounce to the upside. And if we didn't have enough volume up there, potentially tracing back. It's been a little bit choppy since then. A lot of that pattern kind of played out, and definitely looking forward to hearing about what Tim has to say on this today. Tim, how are you doing?
Good. Are my charts up?
They're saying your chart is not up, and I'm going to work on getting it up right now since you sent it to me. So.
All right. We'll try that then.
Yeah, absolutely.
All right. All right. So anyhow, we got chart one. This is the chart I'm kind of leaning on. I know the S&Ps were up today, but we really didn't get a real powerful signal.
Totally.
I thought we might bounce because we tested the previous low of April 10th. On a lighter volume, that means you're going to bounce. But we didn't have a trend or a panic reading in the trend to really determine be a worthwhile bounce to the upside. But anyhow, what I'm looking for now is this trend. I got the bottom window here is the 3-day, next window up is a 2-day, next window up is a 5-day trend, and the top window is a 10-day trend. 10-day trend is the most important of the trend moving averages because that's basically 2 weeks of panic. And you get 2 weeks of panic, you're going to have a worthwhile rally that could last weeks, maybe even months. The 2 or 3 or 5-day trend, you can bounce maybe a week at most, but you get so anyhow, in a nutshell, the 10-day trend is 103. So even though the market's bouncing here, this is not going to be a long-term bounce.
Right.
So let's flip to chart 2. This is something that's kind of developing here. I think we're actually making a bottom in the market, and the last low we had, I think it was April 7th. We actually had a sign of strength off that low. And there's different signs of strength. There's this wag breadth thrust indicator. There's a volume strength. There's this happens to be an advanced decline strength type thing. And it's basically a 5-day average of the advancing over declining. So it's kind of a ratio thing. So anyhow, you needed to hit 0.3 you need the 5-day average needs to hit 0.7 and needs to rally to 3 or higher within 21 days. And I marked the times going back to 2021 in shaded pink areas where they occurred at. And we had, at the 2022 bottom, we had 4 of them. On the rally up from 2023, we had one. We had actually one back in January of this year, and we just got another one. And I think this one is going to probably establish a sideways trading range.
Yeah.
And so you got to have a selling climax, then you got to have a sign of strength. If you don't get a sign of strength after selling climax, you're going to get another selling climax. And you're going to keep getting selling climaxes until you get a sign of strength. And the sign of strength defines when a bottom starts forming. Mm-hmm. And so we did get a sign of strength off this. So I'm concluding we're going to start forming a bottom. All right. Let's go to chart 3. This is honing down into the smaller time frames. But the timing 3, anyhow, if you look at the volume chart on chart 3, I have one marked selling climax.
Yes.
And then I have a green one a couple of days later. It's the sign of strength. That's the SOS. So that's how I know we're bottoming out here. Plus, with that previous chart, if you go back chart 2, you have a sign of strength off advanced decline. So now I'll switch back to chart 3. And so now you got a volume and you got advanced decline signs of strength off the lows. So you're definitely making some sort of a bottom here. How lasting a bottom? I've been thinking at best we're going to go back up to the March sign of strength day top, which is that green arrow we have, sign of strength. That's up around 550. That'd be the best we could probably form, because to get through that high, you're going to need volume to be up around 250 million shares. And I doubt that's going to happen, because we're running about a heck of a lot less than that.
Definitely, yeah.
Yeah, so we're not going to get up there. We may get up there, but we're probably not going to get through it. So that's the maximum upside target you're going to see. Then from there, we can't get through that high. What the market does is we can't go up previous high, reverse, and try to take out the previous low. Well, that previous low is actually that same day again.
Yes.
Which is, but we may get through that low eventually. We'll probably go down, test it. We may bounce a little bit. Then finally, at some point, we are going to get down to the selling climax low. And that's where the significant low is going to form. How long all this stuff is going to take could take weeks. But all you're doing now is chopping inside of a market that may go up a couple, 3% a day, which is not bad, but you're almost day trading, because these rallies, declines are not going to last. Not until you get down to really the March 7th low. And if we can't get through that low, we'll probably start extended rally past 550, maybe higher up. But if you look at the bottom 2 windows, kind of see where we are. The 21-day average is coming at 103. The 10-day, this is yesterday's close, also 103. You need them both preferably up around 1.2, preferably higher. So all this stuff right now is pretty much day trading. So that's the S&Ps.
Let me ask before we go into gold. With that kind of rejection, not necessarily rejection yesterday, but I mean, we are bouncing off from yesterday.
Right.
The day prior didn't have any volume at all. I mean, are you seeing significance of that? I mean, is that kind of like a near-term kind of trading range for you? Or, I mean, is it just kind of how it shaked out?
Well, what we're doing, we're bouncing off the April 10th low.
Yeah.
Which is, I had that dotted trend line going across. Well, we tested that low, April 10th low yesterday on a lot lighter volume. If you do comparison volume, which I wish I could draw where that is.
I see what you're saying, yeah.
But yeah, we're testing it, couldn't get through it. Volume was about half. So if you can't get through the previous low, we'll go up to the previous high. Well, kind of yesterday, we did gap down yesterday, so now we're kind of testing that gap. And you want higher volume today than yesterday. If we do, then this rally will continue to the next higher high, which is basically a high of a couple of days ago. And you keep going until volume drops out.
I see.
But as long as the volume is equal or greater than the previous high, the market will keep going higher. So today we probably got some legs. We'll go up a little bit, maybe 540, which is a little high up there. I don't know. we'll get to there, or not. Maybe we'll get to 550.
Perfect. Tim, please stay right there. I know we want to look at the GDX as well.
All right, I'll be here.
Folks, stay right there. We'll be right back with Tim Ward after the break.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, everybody. This is Jacob Schuper, joined right now by Tim Ord of the Ord Oracle. You can check out his website at ord-oracle.com. We just have a short segment left. Tim, I really want to just get in quickly to what you're seeing with GDX.
Yeah, let's go to chart 8.
Yeah.
This is kind of an important chart. This is the HUI, which is a gold bug index, and then the NDX is, the NASDAQ. And the chart goes back to 1993. There appears to be a 12-year cycle in this HUI index ratio. In other words, when this ratio is rising, gold stocks are outperforming the NASDAQ stocks. When it's declining, index is when it's declining, HUI is underperforming the NDX. And I think a big turnaround's come over. If you look at 2024, actually 2024 matched the low of 2000. This ratio did, and we had it kind of fumbled off the bottom, but over the last month or so, we had a sign of strength to go to the RSI, right above the HUI index. You're up around 65 now. That's a sign of strength. Normally, if you look at through the RSI going back to 2000, you had an area which stayed below 50, which is I shaded in pink, and you had areas above 50, which I noted in light green. When it's light green, the RSI is basically staying above 50 or higher. And that's what happens in uptrends, because that measures the velocity of the HUI index. In other words, it's an uptrend. When the RSI is greater than 50, then HUI index is going up. When it's less than 50, it's going down. And normally, you had a sign of strength off of that. The ratio had a sign of strength and pushed the RSI up.
Well, Tim, I'm sorry we had to cut it.
So
yeah, really looking forward to Thursday. I'm sorry we had to cut it short this week. Yeah, looking forward to hearing some more on Thursday. Thank you, Tim. Folks, thank you so much for joining me today. We'll be joined tomorrow morning by me. See you at 9 a.m. Take care, folks.